Commodities are crashing right now, raising the massive question every investor is asking. Is this the perfect time to buy the dip, or is it time to sell everything? We answer this and more tonight as we give you our hand-picked commodity plays that could be the best turnaround stories of the year. Opportunities like this don't come often, so strap in because this is going to be a good one. As the brains trust behind Australia's leading government-accredited share trading education and market insight that is regularly called upon by major media outlets, we'll show you the professional stock market playbook that actually works. I'm Philip Tortevsky, joined by senior analyst Janine Cox and Pedro Banales, and we are Wealth Within. Good evening, Janine.
Good evening. Fantastic day today. Beautiful weather, isn't it?
Beautiful day. We're going to dive into the rate decision soon. We're going to dive into the crash on markets. We are joined by Pedro, which we're going to get into in a second. How you going, buddy?
G'day, Phil, Janine. Very good, guys. Looking forward to today's show.
Yeah, we're definitely going to be answering some important questions every investor wants to know. So let's dive right in. Now, in 1 week, we've seen gold and silver plunge 20%. Natural gas is down over 40%. It appears to have come out of nowhere. So what is going on here, Janine? I want to get your thoughts. Gold and silver, they were the darling markets in 2026 so far, even 2025. Every investor thought it was only a buy, and here we go.
Yeah, I think every investor thought that the run would go on forever, but that's why we have rules, isn't it? And, you know, you pose the big question about what they should be doing as well in this situation, which is probably the more important thing other than what's actually happening. Everybody dives in to find out why is this going on, when in actual fact it doesn't really matter.
Yeah.
As long as they've got their rules and they're managing their stocks, they've got nothing to worry about. And should they be buying right now? That's a big question, isn't it?
Yeah, we're definitely going to dive into that, but I think it speaks to the importance of being, especially in today's world. I think the active word gets thrown around a lot, but more than ever now, we've seen COVID, we've seen tariffs, we're seeing what's happening in gold and silver. If you're not active, if you're not watching your investments, if you're not finding opportunities to get in and out, I'm sorry, you're behind the 8 ball here, because you're going to see moments like this, and news is changing fast. Obviously, we've had a new Fed chair be announced, and that's been some of the reason why we've seen gold and silver come off. The US dollar has rebounded quite nicely. Is there something in that maybe the confidence is coming back into the US dollar and the flight to safety is easing off a little?
Yeah, I mean, that's going to be a factor involved in the movement of gold and silver, but I think it's more a cyclical thing as well. There's also that cyclical move in gold that happens, and we see it because we do the analysis to know that everybody's looking at the news and wanting to know what's going on, but there's always a technical reason for why these peaks happen. Yeah,
we show it time and time again on the show. We saw silver, I mean, vertical, and I remember I did a TikTok a few weeks back saying, look, silver might be done for the short term. And
I mean, it's ahead of, we've been thinking that the market may pull back in this quarter, and we've just been preparing for that. And so it's no surprise to me that we're seeing the heat come out of these commodities. Yeah,
fantastic. All right, now you're all over the commodity space there, Pedro. Anything to add on this latest carnage? And is this more of an opportunity scenario than a danger scenario playing out right now?
Well, look, in terms of opportunity, I'm not sure about gold and silver. And you know, I remember we warned about this. Price was really parabolic. And that's one of the reasons why looking at a chart is so important, because you're just seeing that price rise nature of that. And you're just saying, I don't want to participate in this market because, you know, things like this could happen. Now, in terms of LNG, you can really blame the weatherman for that one, because forecasts came out, you know, early this year saying that there was going to be considerably cold weather in America, and that was true. I mean, right now they're going through some pretty cold snaps up north, but at the same time, now they've changed the forecast and they're forecasting higher than first thought of temperatures. So really, we had gas jump around 140% in the space of a month, and then now fall back down to those previous levels. So we are in very volatile times, and it just shows, you know, how quickly the sentiment can change, and therefore the price can get sold off like that.
Yeah, fantastic. All right, well, let's get to the good stuff. Stock time, Janine, and see which of these opportunities are buy the dip or go away type scenarios.
Yeah, I mean, when it comes to gas, you can't go past Santos. So
that's the first.
Have a look at this chart. It looks quite amazing at the moment, and it's been poised for so long, and I feel like we're a bit of a broken record on this, but at least you know that when it does go, you know that we've been telling you all along to keep watching it and don't lose track of it, and we'll keep you keep you posted. But at the moment, obviously, we've seen this initial push up week ending the 30th of January, and there's a little gap there. So I'd just be watching that because we've seen a little bit of a sell-off, a little bit of weakness coming there from some short-term profit takers, but it may turn around and head back through that high of 709, or it could come back and fill that gap. But what would be really exciting about Santos? Well, there's a few levels here. One is the level that actually held it back through this period here in 2018 and through 2019. And notice how Santos, like any stock, was not immune from COVID and then literally traded sideways for all this time. So there's all this pent-up energy. We know that the takeover offer was significantly higher than where the current price is. So we know that a company was willing to pay more for Santos. And now it's just all about waiting for that move to happen. Now, in saying that, we always have to be prepared for the alternate view. This low here of $5.90, if it was to head through that low, don't think you're getting a bargain for 1 second, because that could mean that we're seeing further sell-off to come. But, at the moment, we're still seeing, a lot of, speculation in Santos, which could see the price go higher.
I think what I'm hearing from all of this, and correct me on that, is that this is a patient play right now. For those short-term traders, looking at that scenario, maybe some range-bound opportunities, but then again, really, if you want the meat of stuff, you're saying maybe best to hold until 8, 7 or 8.
Yeah, and I think this is sort of a bit of a danger zone right now for especially for inexperienced people that don't have proper rules to think that they're getting a bargain with no stop loss on a stock like this. It's not how you want to play the game with Santos.
It's a really interesting point, and I just wanted to bring up one final thing before we move on with Santos, because as Pedro mentioned, the natural gas price was down or fluctuating 140%. It's currently down
40%.
140 up and down for the month, but down quite a bit right now, 40%. But then we look at Santos and it hasn't moved as much on the way down. So I think this is an important thing to take away, where most people, where they look at the underlying gold or silver and then try to relate it to stocks, that not always
good point.
will you see the same thing going on.
Yeah, contracts are sold all the time, future contracts. So it means that when Santos has got those contracts in place, its price is locked in for those contracts, whatever that is. And as more oil and gas becomes available and supply increases, if demand stays the same or goes higher, we're going to see Santos's share price go up, I think. But it's also about licenses. These companies, they're trying to get licenses, or they might merge or buy other companies, and that can actually lead straight to the bottom line. So that can also be important. So I'd watch this space for that sort of activity as well.
Fantastic. All right, next one.
All right, Beach. Now, Beach is an interesting one. This one's a lot more volatile. This is probably a trader's stock. I would encourage people to think of this as a short to medium term proposition, particularly as we've seen these long rises, and they've lasted for a year, maybe a year or two in some cases, 500%. And that's a really nice opportunity, because it means you don't have to try to get in right at the bottom. I guess that's one of the important things to think about when you're looking at the history of the stock. And it's why we teach it, because you might be thinking, I need to trade daily or on the daily charts. And then when you actually see what happens on the monthly chart, you just feel like people have been, haven't been telling you the full story for so long. Because the chart tells you that there are so many opportunities, 200% here, and then another big rise we saw more recently from 2016 when all the commodities turned, 700. If we see a turn back up again, and at the moment there's this basing pattern with all of these lows showing that there could be some support, it may have to actually dip below this low in September 2024 to find that support. It's done that in the past. We can see this nice sideways consolidation here back in 2009. It dipped lower a couple of times before it took off. So don't assume that just because it seems to be finding a bottom that it will from that point. That's really what I want to say. Yeah,
and I want to get your thoughts on this one, Pedro. Given where that stock is right now at that $1.20 level, such an important level, let's just hypothesize, if you're not a trader looking for confirmation or really trying to eke out the best risk-reward type entry, are you getting a bargain deal at $1.20?
It would certainly seem so, especially if you're following the story. Really, the sentiment is against their Watsonia plant. I believe that they're putting a lot of capital into to build it, but it seems like that sentiment could possibly change pretty soon because it looks like that plant is almost done and will contribute to their bottom line. So that actually goes hand in hand with what the price action is telling us right now, that price is consolidating, it's banding together, it's squeezing, and like a coil, it's going to jump in a certain direction. And to me, it looks like there's some very solid support around that $1.10, which it's bounced off multiple times, and it's looking to possibly break above that downward momentum. So definitely, I'd just be looking for a break below that momentum there, and I'd be happy with that one.
All right, I'd like to just add one more thing, Phil, on
tongue-tied, BPT.
BPT.
That's it.
I'd like to add one more thing on BPT. Just looking at the chart there, you can see that this is actually a real sideways move that's got it locked in. But once it gets free of that, gets above this level at around $1.50, then it's more likely to head to $2 and possibly even up to this prior high at around $2.80. So it's about setting up the right trade, not just jumping in on anyone.
Yeah, fantastic. All right, let's get to the next stock.
AGL. Now, AGL we've talked about on the show a few weeks ago, I think it was. Now, this one is a really interesting one. Looking at the way that this trades, it's just changed the personality of the stock. You can see lots of sell-offs along the way here. Each time it tries to get away, it's been sold off again. And look, I'm really quite excited about it, but at the same time, I wouldn't care if it fell through this low in August 2025 either. That would just set things up further for us. But what's really exciting is if you've read Dale's book, then you're going to look at this stock in a whole new light because it really responds to the angle of the trend. You can see it, that's what it's doing right now. It's actually just got stuck there, and it really needs to break out of that angle to prove that it's more likely to go up. Don't be tricked by false triggers. You actually need proper rules, even if it just breaks its head above a trend. That's what people don't realise. They think, oh, it's through a trend line, but hang on a minute, what is the actual rule that you're using to do that? And that's where that book and the second book really tie it all in together. Yeah,
now what Janine's talking about is How to Beat the Managed Funds by 20%. It is by Dale Gillham. It's free. You just have to pay the shipping. The link is in the comments section below. We've got plenty of it, so please go and grab a copy. But yeah, like you said, Janine, it's so important, this book, in terms of getting those basics down. And there is a lot that goes into what we do. It's between the ears, not always shown on this show. So if you do want to get more in depth, go and check the website out and have a look at our trading course, Diploma of Share Trading. It is government accredited. And please also go check out those testimonials because you'll see what's possible and what our students are doing, which is amazing. But let's get to the next stock. Pedro, are you happy to take the next one away?
Yeah, sure. So next up we have Broken Hill Mines. That's ticker code BHM. Now look at this one. This has had a beautiful run since it first IPO'd back in July 2025. So it's a fairly young stock here. And now I'll zoom out the monthly chart just to show you. It had a bit of a dip when it came out, but it was lucky that it came out when the silver prices were booming. So that's one of the tailwinds that really helped to drive it up. But you can see how it responded to that crash in the silver price. You know, it gapped down from this month here, which was January to February here. So let's have a look at what's happening on the weekly chart, because we don't have much data to go by. And really, it's come back to the momentum of this trend right here for me. And it looks like it's holding up. So as long as it holds up that momentum, I think that it's okay. It's not in too much trouble. We do have some more volume coming into it while it's falling. But that's not always, you're not going to just base your decision solely on that. Obviously, there's more analysis to be put on. I think that this is actually going to come back and refill that gap eventually, considering if the price of silver does recover. If the price of silver doesn't recover, then I could imagine that this would actually keep on falling. But at the moment, it's a falling knife for me. I don't think there's much confirmation. I'd really have to go to the daily chart, really, because we don't have much data. It's got a beautiful trend if it manages to hold up. Now, I can see a bit of a reversal here on the daily chart. Obviously, today hasn't finished yet, so we're not quite sure, which way it's going to close. So again, my statement still stands that if it does hold above this up momentum, then it's looking good.
Yeah, it's really interesting. I mean, when you look at that chart, and I'll get your thoughts on this as well. What's a pullback? When's the time to get out the way? When's it a time to buy the dip? And often that answer comes from by looking at what happened to the left-hand side of the chart. And I think that's why, Pedro, perhaps you're looking at that and thinking right now all the info that's been given leans more towards that this is just like a normal healthy pullback you would see, in fact, promising on a certain stock. But, like you mentioned, obviously that confirmation is not there just yet. So definitely one to throw on the watch list. Did you want to add anything on this stock, Janine?
Yeah, look, I mean, just the fact that it started off so well in the first year that it's launched, to me, this is just perfect timing. The people driving this company have made a really good decision, and I think that's something that you can't take lightly as well, because obviously management are important, but they're not the factor determining when you buy. The thing I like about this is the fact that it's had such a great run and consolidated nicely between around 70 and 90 cents, broken through that dollar mark, and it's coming back to test it. To me, that's just a classic sort of setup. If it's able to find support around $1, there'll be more commitment to a stock like this when it finds that support and turns back up. But I wouldn't be trying to dive in to buy anything right now, because just as we say that, we could see prices come back to November 2025.
Yeah.
So it's got to prove itself before you invest your hard-earned money in it.
Fantastic. All right, let's get to the next one.
All right. Now, ASL, Andean Silver, there's a lot of money that was made in the last probably 6 months on this stock. It's had a beautiful rise. It's only come back around 27% so far. And when you consider that it had a fall of about 50% back in December 2024, then the current fall is really probably what you can expect down the track is to be quite normal for a stock like this, when it's making highs and trying to find whether it's got the momentum to keep going. But what worries me a little bit is this outside bar on the sell-off, the strength of that bar on the 30th of January, and given we're seeing that across the board, obviously we know that it's the commodity driving it. So I just want to put the underlying on the same chart. If you're charting this yourself, make sure you're looking at the underlying and how this stock responds, not just the pullback, but once silver finds a base and then starts to move back up again. And if it's going with it, then you could expect that Andean will continue to track it.
Yeah, it puts it in perspective, doesn't it? When you look at the history, that is not the biggest fall that this stock has had, the current one.
But they're just talking it up like it's a disaster that's never happened.
Yeah, so hopefully that has put a lot of perspective on what is happening right now with the current crash in the precious metals. But that wraps up our first round. Stay tuned, because we have got some absolutely amazing stocks coming shortly, and one from the tech sector in one of our viewer questions that is looking very, very interesting right now. But let's move on and get into our trending topic this week, Janine.
Now, Phil, are those alarm bells ringing?
Look, can I say you were right? You said rates are going to rise. You've been saying it all year on the back of everybody saying no.
I can tell.
If I had champagne, I'd give it to you, but I don't.
I don't think it's a champagne moment. I'm not happy about it.
Yeah.
And look, I'll tell you about my gripe later. But are bells ringing following the decision today by the RBA to raise the cash rate by 0.25%? Well, it all depends on what camp you're in. While it's good news for depositors, it's the opposite for borrowers. And one thing that seems certain is that we're more likely to see more rate rises in 2026 than cuts. And there could be 2 or 3 further rises this year. So what does that mean for our market? And could we be about to see a pullback? Before we get into the charts, just remember this. The RBA's job is to maintain inflation between 2 and 3%, and that there is sustainable employment. So those numbers are always going to be thrown about. Now, this morning, their website displayed 3.8%. Now, obviously, if you're looking at the website, it may have changed since then. You can see the recent rise on the graph of the Consumer Price Index. So keep an eye on this graph at all times so that you know what's going on. You can see that target range across there. We're above that range, obviously, right now. I personally thought that they would have gone further than a 0.25, given where we are, and they must have, be expecting that, to make another increase in a month or two. That's the way I'm looking at it. So I think that the next increase could be sooner rather than later.
Yeah, it's interesting depending on what camp you sit in. I mean, we are, in terms of a lot of the developed nations, the only one that's going back to hiking. All the others are thinking about cutting. You have the situation with the Aussie dollar now that's woken up. That's going to help fight inflation. And really we're sitting in a, I guess, situation where we talk about the trimmed mean, we spoke about that off air, that's trending downward, yet it's the housing and the energy, which is the sticky stuff.
Employment.
Right. And a lot of that is, okay, yeah, manipulate rates, but when do you start to use other tools and factors which, like policy, which have really affected those two sticky points?
Government policies obviously
has had a huge impact, and something can be done. But I mean, look, interest rates is the way they're going to go about it. And
look, on all my years of studying the stock market, I've just come to the conclusion that we could sit here and gripe about it, but there's nothing we can really do about it. You've just got to be aware of what you can get out of it. So while you may be dealing with increases in your borrowing rates, the point is, if you're in the stock market, that can provide a bit of a hedge against all of that. If you're not investing, to me, that's where the issue really is.
yeah, offset.
Yeah. So a lot of people are a bit nervous about inflation running away, and will the RBA apply the right measure at the right time? And if you've watched previous shows, you know my thoughts on that. Only history will show, though. What we can do is take a look at the chart of the market to understand what these decisions do for our market. Phil,
All right.
Now, we know that let's go back and do a little look at history. So in May 2022, the RBA started changing its policy on the cash rate. And we know that our market went sideways because there was concern about inflation. So these increases, if they have successive increases, will eventually turn our market. It's just a question of timing and when that happens. We know that they got it wrong before the GFC because they were during this time here, they kept on hiking and the market wasn't turning because we're in a bull market. It's the phase of the market. It doesn't matter what they do. It's not part of that rise is still going to happen anyway. That's just nature. And then following that, they continued to increase the rate. And eventually we had an all-out sell-off and a dramatic rise that is only going to be exacerbated by those increases if they go past the curve, if you know what I mean.
Yeah.
So beyond the point where they really needed to, because the data's still showing them whatever it's showing them, but it's sort of a lag effect, if you like. And that's why often they'll wait 6 months. But if they put successive increases in position and then in play, and then they don't wait that time, which I don't think they did through here, and we can see that our market went sideways for so long, longer than it probably naturally would have otherwise. So now we've seen a decent rise out of that, and forgetting that Trump sell-off in there. But if we also go back and have a look at what happened after the GFC, there were 7 successive, I think, or there might have been 4 successive increases and then another 3 after that to try to turn things around. And it wasn't until November it was actually cuts, because because they'd cut all the way through here to the bottom until about 3% to try to get the market to stabilise and for the economic conditions to stabilise. But then back through this rise, if we're looking at what happened to the market when they started to increase again, they pushed the cash rate up 7 times along that rise. And then what happened? Our market went sideways for at least a year through there. Then we had the tsunami that complicated it. So, there is a definite correlation between what goes on in our markets and what happens with that cash rate, which is natural to think because it's all about the flow of money. Where's the money going to flow? If people start worrying about the stock market, where are they going to put it? Historically, they put it into property because bricks and mortar have been seen as safer, but that's not always necessarily the case. So just looking at where we could end up now, at the moment it's too early to tell because we've only seen this one increase. And last year, the RBA was cutting. So I think, if we see another 2 in the next 3 or 4 months, then I would be thinking that we could potentially go into a little bit of a slowdown. But If they just wait a month or two and then do another one, that sets the scene to tell me that most of it's going to happen in the second half of the year.
Yeah, it's a good point. I mean, they've been preferring those quarterly numbers more so than the monthly figures.
Yeah,
So.
and if they only do three and they're spaced apart, then our market's more likely to keep going up.
Yeah, all right, there you have it. If you want the skills to analyse stocks just like you've seen tonight, visit our website wealthwithin.com.au. But now let's get back to our topic and get into some more stocks. Pedro, what have you got for us?
All right, next up we have Champion Iron, that's ticker code CIA. Monthly chart on the left, weekly chart on the right. Now, you can see the sell-off that recently occurred here on the weekly chart as I expanded out, 23rd of January, 30th of January. So that's a week ending date. And really to show the nature of it, it was around that 14%. But right now we are seeing a bit of a reversal happen, and I can see why, because when you expand that out and you look at the historic price action, you can see that there is an important level right around there. So around 2020, price found resistance at around that $5.60. It went through it no problem around 2021, went through it 2022, but again, found resistance 2022, support 2023, support. I mean, you're getting the idea now. And more recently, it found resistance in November 2025. So we are at a critical level. We're also at the point where it might break that momentum that it's happening. So, and that'll be actually a good thing for this stock, because if it does find that support and then starts rising from here, then we are likely to see a more sustained rise as it respects that momentum there. You know, you don't want to see price too parabolic like we saw on gold or silver. So this one, I do like it. I'm keeping an eye on it. Those two levels there are the ones for me.
Yep, fantastic. All right, let's get into the next one. Janine, what have you got?
All right, I was so captivated by that one. Bellevue Gold, that's an interesting one, isn't it? It's had a stellar run just more recently to challenge that all-time high. And I think this one will probably take a little bit of a breather at the moment, which is what it's done. Not too much of a pullback to be concerned about right now, just in the scheme of things. In terms of that overall trend, it's not a big move. Look, right now, obviously you're not going to be trying to buy it. I think that if it had a decent pullback and we saw that come into effect on the monthly chart and then it took off through that high, then that could be something interesting to watch. But I'd just sit and wait. If you still own it, right now there's no reason to be selling it. I can't see any rules that have triggered to get out. Yeah,
now I know we're not covering every gold and silver stock or natural gas, but the theme I'm getting here today so far is that these are quite uniform and pullbacks that were eventually going to come, more so than full-blown reversals or crashes. And I want to get both your thoughts on that before we move on to the next one. Is that the theme, I guess, coming into what's happening right now with these stocks?
Yeah, I mean, what we've been seeing is these stocks moving to new all-time highs and, you know, making these stellar rises and really accelerating off. And that's sort of taking a lot of traders by surprise, that they'll be feeling pretty happy about it until news like this comes out and then makes them fearful, and then they start thinking, should I be selling? And then, you know, we see this with new traders all the time, and they get to write into us through our support service and say, look, you know, I was thinking about selling, but my rules haven't triggered, or what should I do? And it's just being able to have that conversation with someone. It's via an email, but it's meaningful, and you've got a nice reference for down the track, because as a trader you need to be recording your thoughts in a journal and making sure that you then go back and review what's happened. Now, if you held Bellevue Gold through this rise here, you'd be probably saying a few nice words as it's moving up like that. But what I found really interesting from a technical point of view is the fact that it took all the way up here. It's continued to take out the all-time high. And it could continue to do that until it tells us otherwise that it's going to. And I was looking at the chart thinking, well, this rise is very different because it was very choppy leading to that high, but then we've had the run out of the COVID low and it was just straight up. But look at the plunge that happened afterwards. So, you know, just bear that in mind. But I think this is a bit different. It might pull back and then we'll see it try to push back through that all-time high.
Excellent. All right, next stock, Pedro.
All right, next up we have Simplats Metals. So this one is one that's in the platinum space, and not many people mention platinum, and that one actually had quite a sell-off as well. So you can see that the stock wasn't immune to that price action. What I like about this one is that it's pretty nice to trade. because you can see that it shows its hands a lot. And what I mean by that is volume actually coincides with the price movement. So you've got high volume, then we've got a sideways pattern, then high volume as price moves up, and then price consolidates, and then we've got high volume on this next up move. I mean, you can't get more predictable than that. Now, at the moment, we've seen price gap down, but there's not much volume coming into it. And it looks like the close is going to be higher than the open. So there could be, some reversal or possibly a filling of that gap. But really, for me, I'd want to see something like we saw back here in 2025, these types of consolidations. So really, I'd put a line in the sand around that $25 and possibly on the low of that $22.50. Now, I know what you're thinking. Well, the price is already below that $22.50. Yes, but I'd like to see price, if it does come back up to this range, they are the two levels that I'd be looking at for support and resistance. If it keeps coming down, then again, and that's what I was saying with that kind of that trend that we're seeing with a lot of these types of stocks, they're coming back to that momentum that they've established. So we could see a retest of that $20 as well if it comes back to retest that trend there. So they're the three levels really that I'd be looking at, and they're in nice $2 increments, so nice and easy.
Fantastic. All right, next one.
The next one I'm really excited about, Phil. This one's Linus. Now, I know that a lot of people have been trading this one. And is this another drone shield type moment, looking at Linus and the way that it's unfolded? We can see there that there's a bit of a peak setting up as a possible entry here at around 1777, depending on what your rules are, would determine where you actually entered. But the pullback that happened here, let's not forget the volatility of this type of stock and that it can just turn on its tail at any moment. 44.80, but also these smaller moves that are now dwarfed. They weren't small either. We're talking 20% pullbacks on the stock repeatedly as it was trying to get going. So, that tells you about the sort of rules you might have to have. But the reason that I'm excited about it is because in the past, just look at how it went. It just seemed to go for a very short space of time and then, spend a lot of time faltering or falling back to these levels. And now we've broken all of that. It's just on a completely new trajectory. So to me, anything's possible with this stock right now. And I don't think people have really missed the boat. The all-time high is 26.50. So if you're still holding the stock, I wouldn't be selling it right now, given that it's trying to find support. If it goes through this low here, then I'd just be a bit concerned that it might do something different coming back through this $7 or $8 mark. However, to me right now, it looks fine.
Fantastic. All right, Pedro, you've got the lucky last, mate.
All right, save the best for last. So now we have Iluka Resources, ticker code ILU. Now I was just looking at this chart, and what I found interesting is, the type of market that we're really in, and you guys touched on it earlier when you said that you really need to be active these days or else you're going to be left behind. And that is so true, because you look at the range of these bars going back to 2005. Look how small and short that range, but it was following a nice, comfort trend. And then it would have this huge price rise. But, of course, the ranges were more than before, but not so volatile as we're seeing now. The most volatile one that I can see here is about that 46% in 1 month. And then we can see another one here, 34% in 1 month. Got a bit volatile and then it got sold off. And then it was back into that normal kind of volatility. But have a look at where we're at these days. July 2025, we've got one monthly bar that is 51%. Then we've got another monthly bar that's 32%. And have a look at this more recent one in October, 52%. Those spikes up, I mean, that will blow somebody away. If they don't know what they're doing, you would think that this is going to continue up. But yet, if you would have bought at around that $8.60 level, $9, you'd be at a pretty big loss at the moment. So really, with this one, you need to know what you're doing, but you can make some good profits from it. So I'll just quickly go to the weekly chart to see where we're at the moment. Basically, we've established this topping pattern right now. It is moving down, but I think it's coming to a very nice level here that it could possibly find some support around that $4.70, even a little bit below there at around that $4.20 as well. as the real base for this one. If it gets to that, I'll be really excited about it. But for the moment, it's falling, and you have to assume that it's going to keep falling. So don't catch a falling knife, but I do really like this one. Fundamentals are looking good, and they're working on the Aniba plant, which is processing rare earths, which is going to be the largest outside of China. So that is huge in itself. Yeah, it's going to take a couple of years to finish, but good potential.
There you go. That's one to watch. Now, before we move on, let's get both of your opinions on which one out of these 10 is the best buy the dip type scenario right now.
I think Linus.
Yeah, right.
Perspective, yeah.
Okay, cool.
That last one, I just think that's just totally bizarre. It's totally thrown me. I get emails every now and again from people wanting to understand how patterns are working.
Yep.
And looking at that one, this was one that I'm looking at, I'm scratching my head, and I very rarely ever find one that I can't put a pattern on. But that's the nature of some of these mining stocks that are super volatile. Sometimes it happens.
Fantastic. All right, Pedro, your thoughts?
All right, I'm going to have to go short term, Beach Petroleum, but I'm keeping an eye on Iluka as well.
There you go. 2 in there, keep a close eye on. Now, moving on shortly, we're going to get into our hot stock tip, which has had massive news come out today. But first, let's answer your questions. Ryan writes, I bought CHN at $1.81 on the 1st of September with a stop loss at $1.55. I have 2 key support levels marked at $1.40 and $2, with the next key level at around $3.60, which coincides with the annual report balance sheet projections of potential earnings on a positive year. I've pulled half of my trade capital out at the first target of $2.40 and leaving the remaining capital to run to the $3.60 target with a trailing stop. The macros of nickel and copper are performing well also, and I'd be interested in your thoughts on my trade. All right, I'm going to go to you on Pedro on this one, because there's quite a bit in that. He's obviously marked a few levels, but I think the more important thing for me is, yes, let's address those levels and where you think the stock's going to, but what are your thoughts also on trailing a stop?
Oh yeah, I mean that's an excellent trading strategy, and definitely one that's very effective. And there's multiple ways to trail your stop. Obviously, we cover that in our courses. So hats off to him for actually applying that. Now, be careful, because I've seen other types of trailing stop loss strategies which are just rubbish, to say the least. 10% from the top or from a peak, things like that. You really have to have a repeatable type of pattern that you're identifying. And in terms of earnings season and reporting, it's good to have a look at those things, but that's not going to tell you where the stock is going to find support or resistance. So definitely looking at the chart and outlining those levels is the way to go.
And I mean, we're looking at that chart there, that stop, $1.80 entry with $1.50 stop. Boy, unless you're trading short term, what do you think about that?
Yeah, it's pretty tight. So let's expand out the weekly chart here as we look at Chalice Mining. The stop here, it's at a critical level. Yes, it's a previous trough. But if you were to have a look at the previous troughs, are you going to be able to repeat? Is there a reason why that stop loss is there? Is it because in previous times it's found to be a good strategy to exit? Or are you just putting an arbitrary level there? That would be my question there. What's your back testing telling you? Because that's going to be your important part of the assessment. So a buy at 181, that would take you to roughly 15%, which it's fair. It is a fair stop loss. I think that, look, I don't have a problem with it. I think that he's done the right thing, and at least he's got a stop loss in place.
Now, can I ask you, Janine, obviously, because there's something I'm seeing in this one. He's bought in September. He's had a stop at $1.55. Price has gone to the stop. Yeah, and he's still holding. What's going on there?
Well, look, I wanted to say you rock in terms of the stock that you've chosen first, Ryan. It's a fantastic stock. I love the timing of your entry. I thought you kept it simple. But the stop loss is the thing. Now, maybe he's forgot to tell us that he was waiting for maybe he's waiting for the end of the week or something,
You're being nice.
I am, because that's, a thing that he could have done. And then it reversed from there. So it actually taught me, me and him, I guess we're all sitting here learning something every moment, in that it actually didn't trigger his exit if he was waiting for the end of the week, and now it's gone back up again. So, but I think, this is a great stock choice, tick there. I like the entry point. Not sure about his stop loss and whether it got triggered or whether he was just doing a wait and see. But he may have been busy at work that week. You don't know. Things happen and then all of a sudden the stock reverses and turns back up again. Oh, what if pardon me, but what if you had have actually got out at that point? So sometimes it pays to actually really be clear on that exit.
Yeah, but that's the part I think that's often not spoken about, which can destroy the psychology because, here it's a scenario where you can almost reward yourself and go, see, I did the right thing. I waited. If it was a wait and see, I'm not saying it is, just hypothesising. And you do that enough times, then you wait. It could have
been a bigger fall the following week.
Then you wait and see at the wrong time, and it completely destroys you. So I think, like the team are saying, great choice. Just if you've got a spot that you're going to get out, make sure that next time you stick to it just to keep yourself safe. But anyway, let's move on. Jack's email is next. Bitcoin is getting smashed at the moment. I don't own any, but have always kept an eye on it for a good entry. Is now the time to get in? Janine, Bitcoin.
I'm loving this right now, and just seeing how it's unfolded. A 41% fall right now. It's come all the way back to that level there. This is the problem with, assuming that the past is going to continue to repeat.
Yeah.
Look, it may consolidate, but look what happened back here. A similar scenario happened. It made this high in April 2021, and I don't want you to have to get your binoculars out, so let's take a good look. And then it made another high just slightly above in November 2021 before it actually plummeted. So that was interesting to me to see that happen. And I think the timing of that's important as well for many reasons. And we could perhaps do a show on cryptos at some point.
I think we've covered it, especially with Bitcoin. You go look at that chart and you tie from low to high Bitcoin since its inception, and you'll find every 4 years there's a peak before a crash.
No coincidence there.
No, and we've done articles on that and spoken about it, and literally to the month was when
a war is being fought in the stock market at times. It always has been. And so we've got to think about that. I mean, the US are trying to tie themselves to cryptos, and the Chinese are tying themselves to the gold price.
Yes.
So there's always going to be that huge sell-off eventually.
And funnily enough, that story has happened in history a very long time ago with the China and gold situation, which I won't get into. But let's move on to...
Can you do a podcast on that one?
We've spoken about it, not in depth, but it's an interesting study to go and see this play towards...
I reckon you're going to get heaps of comments after this.
I hope
people
not.
saying, please do that story, Phil, we want to know.
I really don't want to go back there, but let's move on. Boris is next. And actually, before we do, Bitcoin, where do you see it moving to? Because
do I have to share that?
Yeah.
Okay, look, right now it's at a really critical level here in around that $73 mark, because if it actually closes strongly below the April 2025 low, we could see Bitcoin come all the way back to somewhere between $50 and $60. That's the risk right now with Bitcoin. If it actually finds support here, and I'll just go to the weekly chart to have a bit of a look, and it may very well do. It's actually looking like it might have exhausted a bit of this run, because look at the volumes dropped right off as well. So if we have a look at that, we'd want to be getting a good set of rules before we even consider getting an entry back in here, given the sell-off that's come about. I'd be a lot more comfortable with it if we just got that sell-off below that low there first. Comes back into this move somewhere between $60 and $65, and then take an opportunity from there. But it could turn earlier, Phil.
Yeah, and I mean, if history holds true, and I don't want to scare anyone, but $20 to $30 doesn't seem out of the ordinary.
That's
if you look at history and the way how violent the ups and downswings were and have been for Bitcoin.
Yeah, exactly. It also tells you that there is always another opportunity.
That's the more important point. All right, now Boris is next and writes, can you take a look at LGP for me? It's in the marijuana space, and I think this space will grow in the future. Well, it is a plant that definitely grows. LGP, Janine,
all right.
What do you think?
LGP, I think you've spotted a good one, just looking at it. Short-term price volatility is a little bit questionable, but the setup on the monthly is something that's quite typical, although, for me, it's obviously trading at 12 cents. You might be looking at those type of stocks, whether at the bottom end of the range and maybe the next big thing, who knows what could happen here. But if we're just looking at what's going on, it is that nice basing pattern that we're seeing. It's taken off and then it's come back to test and it's moved up again. But, on the safe side, you'd be waiting for it to get through that high there. More short term, you'd be looking for it to at least get through this high in October 2025.
Is this one for you where you can play it purely on the technicals, or given it is in such a niche space, it's quite illiquid, should you be looking into the company a bit more?
I would definitely be watching for the announcements, but then it's going to be too late.
Yeah.
That's the problem with it. So I think with these sort of stocks, you're going to see a little bit of price activity often before that comes out. So you've got to be sticking to the charts. You've got to understand what the prospects are, of course, with the company. But you might find that if it goes south in a quick way, that all of a sudden the news comes out and you hear that something's happened with their bottom line. And that's the reality of it. Yeah,
that you're right. That can often happen with stocks in that space, driven by sentiment and speculation and hope. But let's now move on for our hot stock tip this week. Pedro.
All right, so the hot stock for this week is Xero Limited. Now, before we go to the chart, check out the big news released today by Xero. Xero Limited says AI and US payments are its next big growth engines, highlighting strong uptake of its AI tools and plans to monetize them for FY27. In the US, Xero says integration of Melio is progressing well, with bill payments embedded and operations being streamlined. The key takeaway here is that Melio is on track to reach adjusted EBITDA break-even in H2, that's second half of FY28. And Xero has reaffirmed its guidance, making this strategically positive news for the company. We also had a viewer question come in from Kadam about Xero, where he said, is this the right time to buy Xero? Could you please advise whether this level presents a good entry point and whether you expect the share price to increase from here over the short to medium term? And so let's kill two birds with one stone by taking a look at the chart.
All right, fantastic. Xero.
All right, so on your screen right now is a chart of Xero. Now, short to medium term, is it going to go up? I mean, I think that I don't think that the YouTube ads are going to pay for that type of information. I'm sorry, but basically that is the $1 million question, right? And that's something that you need to determine for yourself by applying price analysis. But I'll give you my take on it. Right now, it's a falling knife. There's nothing to tell you that it has stopped falling. I mean, the news that we just read out is positive, and it does have some very good potential. And I think that it is at an interesting level at the moment. As we zoom out here on the weekly chart, we can see that it was a previous all-time high at around $90. And that level is a pretty important level here for this stock because it represents almost half of what the all-time high is. So I think that this is going to be the critical point for it. If it does break below that $90, then I think that we're going to head back down to a deeper level around that 66. I think that is the real value spot right there. But again, with anything, you need to have confirmation, because what worries me is that it's the longest period that it's being down without a pullback. Have a look at the nature of this previous fall back here. As we zoom into 2021, it fell, had a rebound, fell, had a rebound, fell, had a rebound. So it came down in a zigzag manner. Now this has just been a sharp fall to the downside. Now that could mean that once it hits that $90, that it'll spike back up. But does that mean that the move is over? Well, not necessarily. We're going to have to see a little bit more confirmation. And I'd want to see something in the lines of, a bit of a recovery, maybe a comeback down to around that $100, and then that type of confirmation action there. And I'll just leave that up on the screen there. So you can see that, if it does unfold in that way, we might not get confirmation on this until July 2026. And that's the key takeaway here. A lot of traders think short term, and they think that you're going to make those moves, all their money in 1 month. You have to be patient and you have to find confirmation. So for me, yes, definitely looking very interesting. Short-term opportunity, I wouldn't even be looking at this short-term right now because, when we go to the week, even to the daily chart, it's not showing any confirmation, but we are seeing volume come in here. So interested, yes. Right now, no, it's just a watch, but very high potential on this one.
All right, now if you want more from us, check out our video, the best ASX growth stocks to buy in Q1 2026. Don't wait.